Hey guys, welcome to this week's Young Gun Podcast. We've got Aaron Blasinsky here. He's a portfolio administrator with Fairport Wealth. So thank you, Aaron, for coming on here. It's going to be a fun podcast. We got a lot to talk about. It's a nice summer day. It's beautiful out there. You hear all those birds chirping, guys?
A little bit. They're waking me up every morning.
Oh, wait. That's just Trump's tweets. He's been tweeting a ton. So if you remember back to last year, we had the whole China trade war situation. And then entering this year, we had the whole coronavirus situation. But if you remember before all of that, we had Trump sending out all these tweets, moving the financial markets, and we're back to that now. So there's a lot of craziness. You never know what's going to come out day to day. Trump just signed an executive order saying, hey, I'm going to regulate basically social media companies. So what does that mean for the markets? Or what does that mean for really our First Amendment? What does that mean for all this stuff, guys? I mean, Aaron, let's go to you first.
Well, I think it's a new paradigm. You know, we're living in a, Twitter world, and if you're not on Twitter, you're missing out. You're missing opportunities. We're going by the minute, by the second. 2019 was just markets going up. Trump tweets about a trade war, and we're coming back. And then someone from the administration comes back a few weeks later. Optimism on the trade war, markets back up. So it's really a minute to minute, day to day, and even more so now. I mean, now that we're throwing the trade war back in the mix, I think that really changes things. And I think it's really hard to just put your nail on one thing that's moving the markets these days because it's just so many, but it's definitely a new world,
It is, and it really puts a lot of more uncertainty out there too. Like we already live in an uncertain world with this whole coronavirus situation, and now the China trade war is back in there, and we have elections coming up. So I mean, what does that mean? Our first leg up basically from, if you remember back early this year. Our next leg up from 3050 the S&P all the way up to 3400 was really the China trade war getting signed. So are we going to go back up to all-time highs, Joe? What do you think?
I really don't see all-time highs, but you see the market go up every day, right? But we're getting to a point where all this information is going to start to develop. We're going to be able to analyze it. A lot of the companies came out and said, I'm not telling you our forward projections for 2020 because they couldn't. They didn't know what would be open. They didn't know what their forecasts look like. So they literally couldn't do that. And now we're getting to the point where people have to actually take this information, digest it. And I don't know if that's going to take us to the peak.
Right. I mean, the thing is, information nowadays is so easily accessible. Like there's so much information out there day to day. We get the new information by the millisecond, basically. Back 20, 30 years ago, it took a while to get information. You basically had to wait to wake up the next day for the newspaper to come to read the information. That's why Warren Buffett, had an edge because, like you said, he could basically fly out to all these companies and be there and investigate and find whatever he needed to. So he had all this different, information around him. But nowadays, everybody has access to the same information. So basically, we're trading against computers, right? So how are you preparing for that? In your portfolios for the future, how do you kind of get an edge nowadays?
Well, I think one way that you could have a good edge is, really being extra passive, really not reacting to the quick moves and the reactions to the news. Like you said, I mean, it's definitely a different world. We're not, sitting there with pencils and paper and, scribbling through an earnings report on the weekends. Algorithms and computers are analyzing this stuff every day, every minute.
Oh, yeah.
So, I think taking a step back, letting all that stuff flush out and kind of being calm and analyzing your investments on your own and not really getting jerked either way by the news. I think that's a good way to, position yourself in this market.
Absolutely. I think what Aaron's trying to say is you can't let that behavioral finance get to you. There's a lot of people that panicked when this market shot down 35%. Right. You go to cash and look what you just missed out on. Right. You absolutely need to look at that all-weather plan and give yourself a long-term plan. You don't want to be trying to day trade right now because you're really going to get bit.
So who you're trading against, right? I mean, you're trading against computers. In the short term.
It's hard to be smarter than a computer.
Exactly. And analyze that information.
Right. And they're quick because you hit these certain levels, and that's why we see these spikes, right? We didn't see these large volatile spikes in the past because computers weren't involved. So we didn't hit these levels, and then boom, you got a huge upslide, or boom, you hit a big downslide. So now you really got to go for the long term. You got to look at different sectors, what you believe is going to come out of this in a better sense, because there's going to be those losers, there's going to be those winners, right?
Yeah, absolutely. I think you have to have a combination of both passive and active management kind of going on. So you have kind of the passive management aspect is you kind of buy and hold the best of breed, but you have to have the active management part to make sure that you do pick the best of breed, especially because information is changing all the time. And since you do have all that information, it is important to keep up with that and kind of position yourself within the portfolios. But remember, it might be okay to hold the winners for a long time because, as we like to say, you'd rather own the winners than the losers, right? If you look back in history, mathematically, if you buy stocks at all-time highs, you'll do better than if you bought stocks at all-time lows. So the winners continue to outperform typically, right? So, going forward for the future, there's a lot of things going on, a lot of uncertainty. So, one thing we want to talk about today is really the financial education as well. There's a lack of financial education out there, right? When you're taught in school, you're taught all this stuff, but you don't really learn how to control your finances. So how is change going to maybe be important for the future to make sure that people are getting educated or they do know exactly what to do in regards to our education system?
Well, frankly, to be blunt about it, I think it starts with us, people in our field. We understand it's an issue, and I think it's our responsibility to really, put those steps in place to, change things.
Yeah.
Some of the places I worked, in my background in banking, more client-facing, I saw a lot of stuff that was alarming. Basic financial principles that not kids, not young people. Grown adults that have been managing their money for years and years just didn't know. And sometimes it's frustrating because we live in the wealthiest economy in the world in history, and to ever exist, and we have millions of people out there that don't know the basics.
Right.
So I really think it starts at a young age, and I think it starts with us personally. I think it takes us to take action and make things happen.
Yeah, absolutely.
You got to bring education to the table. It's something that we love to do.
Yeah. Yep.
But on top of that, if you are a parent, especially if you're good at this, get your kids involved early, right? You can open up a Roth IRA for them. Just get them excited about getting money into the market, watching it grow, because if they're not excited, let's be honest, finance isn't the funnest, place to be. It's not the, oh yeah. Right. That is what's going to allow you to do all those fun things you want to do, right? And have a security and have a sense of peace of mind when you get into your older years. And if you don't start early, you don't take into account all that compound interest along the way, you're going to get to your 50s and you're going to be like, whoa, how did I get here? And it's too late at that point.
Yeah, absolutely. I think it's a combination of a little bit of everything. The thing is, you just got to get started, right? That's the important thing, because there's like we talked about earlier, there's so much information out there. People should be able to educate themselves or get educated easily on, the financial things out there, the financial objectives, financial goals, whatever it be in your situation. And I think that's why it's really just important to say, okay, I'm going to set aside some time, and I'm just going to look at, how I can set myself up for success in the future financially, or how I can learn about stocks, bonds. And that's why we're here to help. That's why we're doing this. It's because it is important to be financially educated, because if you're not, then you're going to be at a disadvantage in today's world.
And the big thing is starting with the basics, right? So you don't want to get caught up in trying to be a stock picker or trying to, beat the market on your own. There's going to be things that you need to outsource. I know I just bought a home, and if my electrical goes out, I'm not going to go on YouTube and try to fix it, because I'm going to end up electrocuting myself. Yeah. So there's got to be certain points where you're like, okay, I understand the basics. I understand what accounts I should be using. I'm investing regularly, but maybe I need to outsource this portion of what I'm trying to do.
And I think on top of the basics, that's something I was going to mention, is not even just in the investment aspect, because it all kind of ties together, right? You mentioned your mortgage. What's happening in the financial markets is affecting your mortgage. Right? Yep. So people, and that's another thing, I saw on the banking side of things is, you talk about interest rates and people are like, oh, I don't care. Well, it does impact you. Yeah. The fluctuations in the market every day affect what your mortgage is going to be when you go to refinance in 5-10 years. And I think, talking about young people, just starting with that basic bank account. Yeah. Teach them about debits and credits, how to use a credit card, what interest is, how compound interest works on that side of things. Right? Compound interest is great when we're investing, but on the other side, with your debt, you don't pay off those credit cards, compound interest is going the other way for you. So, it's best of both worlds. It can be, but you can also get yourself in some trouble, like you said before, if you don't know those basics.
Yep. Yeah.
And you see that a lot, credit card companies sending credit cards at kids 18 years old in the mail, and they don't understand that compound interest.
Because the credit cards know they're going to make money off of it.
They don't understand why they have to pay it off each month.
Credit cards are great if you use them correctly. Right.
So if you can't do those things, you're never going to get to the investment point, right? If you're not paying off your credit cards, if you're not saving at a young age, you're never going to have the money to invest when you're 30, 40, 50 and have that nice retirement.
Because here's the thing. If you build up that credit and now let's say your percentage is 20%, 22%, it is more privy to go pay that off because that's a 22% risk-free rate that you're paying off. There's no way that you can get that in the market without taking on some exuberant risk, right?
So there's two more things I want to talk about today in this podcast. Okay. We mentioned housing market mortgages, right? So I want to go in the direction of where's the housing market going because of the coronavirus situation, because people are getting laid off. Are we going to hire back as fast, or are people going to be able to afford their mortgages? That's the first route I want to go. And then the second route is I want to see, where are we going in the future in general? Like what is coming up in the future, like all the uncertainty going forward. How do you position yourselves? Especially you're a portfolio administrator, so how are you positioning yourselves right now? Are you being conservative? Are you kind of being more aggressive? What's your take on that? So first, let's hit on the housing market.
Well, that's another thing is you don't really have a lot of certainty about what's going to happen 6 to 12 months out. Frankly, the housing data has stayed pretty strong throughout all of this. I think that's something that takes a long-term savings plan to do. People are investing a lot of time, and I think maybe one hiccup in the market and especially something like this that happens so fast, someone who's in the process, they're not going to run away so quickly. So I think you're still seeing it strong, but it's like other things. You're going to have to wait 6 to 12 months to really see this play out because the people that are in the market in January, they're not calling off their closing deal in February, March, April, May, June.
Right.
They're going to go through with that because, like I said, this is a long-term thing that they've been planning on doing. So the data is still strong. The data's held up well, but 12 months from now, I'm not sure because, like you said, are these people going to be coming back into their jobs? The people that are thinking about buying a home next summer who are on furlough right now, they might be questioning what they're going to do.
Yep.
So like everything else, just a lot of uncertainty, and you got to take it day by day and just look at the numbers and, try to project it. But, I mean, it's hard to project anything these days, frankly.
Well, from personal experience, my closing date is June 10th. And first of all, it's a seller's market. I looked at probably 30, maybe 40 homes before I found something. And there were multiple ones that I fell in love with. I went home and then it was under contract.
Yeah.
Like literally that day. I mean, they're blowing off the market. It's insane.
That was the paradigm of 2019 and prior, and that hasn't changed.
Right. Yeah. And looking at the pure economics of it, I know right now, why is it a seller's market? Supply and demand, right?
Yep.
So as you said, as people get laid off, I had a buddy who was just furloughed and he was in the process of looking for a home. He went and lived with the parents again, right? Until he could figure it out and then go back into that market. He just got called in today. So congratulations, Ricky. But
shout out to Ricky.
Right? But looking at where demand's going, if you don't have the certainty of having a job, having income, do you want to jump into, a mortgage? If you unfortunately lose your job and God forbid lose your house, now we have more houses on the market. Yeah. We don't have the demand. So obviously pure economics would say that housing prices would go down, right? Yeah. But in my opinion, sitting there, I'm like, I can't wait to see if this happens.
Right. Today that's not the case. Today it's still hot, right?
Right.
There's still a housing shortage, in the United States.
Right.
So, 12 months from now, what you just said, could very well be the situation.
Well, nobody's felt the pain. Like nobody really has felt the pain in regards to this coronavirus situation. I don't want to say nobody, but very few have felt the pain, right? Unemployment, came through, and some people were making more money on unemployment than they were the real jobs. The PPP program came through and supported small businesses like it should have. There were some issues.
Yeah,
right?
I got ripped away by the Lakers. I gave it back.
Yeah, that's right. There were some issues, but it was pretty successful. I mean, to be honest. And now we're kind of back to normal for the most part. So, I mean, I don't think really, truly we felt the pain, right? So I think going forward, restaurants are starting to close here in Cleveland. They're starting to close all around. Some jobs are going to be lost forever. So if people aren't getting hired back as quick, they're going to feel the pain all around. And I think there's going to be a demand shortage in the future for that. And that could definitely drive down prices. So I think that's something you got to look for in the next probably 5 years. I'm not saying it's going to happen next year. I think it's going to be a lagging effect. But you might be able to get some real estate cheap out there.
Yeah, in my mind, I'm sitting here thinking I'm overpaying. Yeah, well, if I wait a year from now, I could buy this for
then I'll be looking. So,
but you have that emotional aspect of it. You're ready to take that next step in life. It took you a long time to save that down payment, so you just You know, if you're in that situation right now, I'm not going to sit here and be like, hey, wait for it to drop. You got to do what's right for you at this time.
Well, the last thing is, guys, I mean, like we talked about, we're always talking about the future, right? Because the past already happened. So who cares about the past really anymore? We can use the past to predict the future, right? But
we've never seen a future like this.
We've never seen a future like this, but that's why it makes our job so interesting, right? So really, everyone's talking about a lot of different stuff about the future, where we're heading in the market, where things are going. But what I really want to focus on is something that we're not really talking about much, which is kind of crazy because we're only 6 months away, the election. Nobody's talking about the election. I'm not saying let's get political here, but how is the market's going to react here as polls start to come out? Let's say Biden starts increasing in the polls. He might be taking over, as president. How is that going to affect the markets if that does happen? What's going to happen here in 6 months? Nobody is talking about it.
Right, but it's almost how's that going to affect the markets? But if you're in the market, you want to look how politics is driving. Well, the market is driving what's going to happen in politics.
Yeah.
So if you look into history, most times, if you see a bull run into the political election, the same party stays.
Yeah.
Yep.
If you see a big sell-off, then you see a change in parties. So that's the way I'm looking at it. It's really hard to predict it the other way.
Is this something you guys are worried about? Like, are you guys looking into this at all? Do you know anything about that?
Well, there's always political risk, right? And I think you're going to see some pretty crazy times post-election if Trump doesn't stay in office, just based on the merit that he's a pro-business president, and the Democrats couldn't be more opposite today.
Right.
So like you said, the politics were driving the markets. It was very back to 2019, the politics was a big influence on the markets, and now that's a good question. I mean, if we didn't have coronavirus, we'd be talking about the election every day.
Right.
Yep.
Right. And now you don't really hear much about it.
So you think it's minimal compared to what's going on? Like, you get this whole coronavirus situation, you're now trying to trade
I think it's
war
really just gonna.
in there. It's kind of like.
It's just the media. It's like you said, the information. It's going to be when the media decides to flip that switch.
So what about the conspiracy theorists?
Oh, yeah.
Well, this whole coronavirus is actually covering up what's happening in this election. That's the whole reason it was there, So you.
Well, I do think it became political. Not to get into politics, I do think it became political. I think the coronavirus situation has become political. I don't think there's any doubt about that, to be honest.
There's going to be a lot of talk
at this point
in the campaign. There's going to be both campaigns.
There's going to be a lot of talk.
Look what he did.
A lot of finger pointing.
Did Trump do it?
Which is terrible.
Did Trump do enough, or what? Somebody else would have done better. How did he handle the situation? We can get all into that, but that aside, it became political, right? But that's why I think that this is being talked about so much, because it became political, and there's a lot of news headlines going
And the
on.
sick part is they're fighting over people's lost lives.
Yeah.
That you really, like you said, the finger pointing, it's ridiculous. So I don't know. You have to try to peel back the layers and figure out your internal beliefs and look at what those candidates say they're going to do and hope that they do it. Yep. But you can't let all the noise around it affect your decisions at this point, because there's going to be a ton of it. You're going to be at a rock concert.
Right.
Yeah.
I completely agree. So, I think that's the best thing you can get out of this really today is tune out the noise and do what's right for your situation, because every situation out there is going to be different. So, Aaron, thank you for coming on this week's podcast. I really appreciate it. You're probably going to have you on definitely again. So,
thank you for having me. This was really fun. Enjoyed it.
Yeah, absolutely. So next week, tune in. We might have another guest. Who knows? Tune in next week. We appreciate you guys tuning in. So have a good week and stay safe out there.
Yep. Have a good weekend.